Hi folks, how you doing? This is Iqbal. Tesla stock has been under pressure since past few days, especially after China delivery target miss from February. So people are nervous. So I wanted to give you my perspective using the financial analysis and the forward PE. This analysis can tell you if Tesla at this point is still cheap or overvalued. So you can make a better buy or sell decision on Tesla stock. So guys, this is my way of doing analysis. If you agree or disagree to my method or my analysis, please write in the comment section so we can further discuss. Now, let's get started.
You see this table on your screen? I put together the summary of the financial data for last 5 quarters, starting from revenue through debt to equity ratio. Take a look the latest quarter, column H. The revenue side, no big change happening, pretty much aligned with the previous quarters. Net income, yeah, there's a major increase this quarter versus last quarter and the last year same quarter. But on the margin side, take a look last 2 3 quarters. See, no big change happening, no major increase. So that's a problem for Tesla. The margin side, they're not able to improve since last few quarters. The EPS actual, no big change for the last few quarters, no major increase. Free cash flow per share, you see latest number 0.64, much better than the previous quarter. That's a good thing. This means that Tesla is able to manage free cash flow per share much better than the previous quarters. Debt to equity ratio, no significant change this quarter. Now let's talk about the EPS and then forward PE. I have this table for the EPS projected versus actual for last 6 quarters. Take a look last 2 quarters, they missed the earning, but before that they were able to either beat the earning or flat, just 1 quarter. In the future quarters, you see the earnings are going up, but no major increase. That's a problem as well for Tesla. Now let's talk about the most important indicator for me is forward PE. I'm going to use forward PE for future price movement assessment for Tesla. In my opinion, forward PE is much better indicator than the trailing 12 months PE. People keep using trailing 12 months PE and make a wrong assessment about the future price movement. Okay, now let's talk about the forward PE and make Tesla price assessment. I put together the data in this table starting from the EPS forward, EPS trailing 12 months, closing date, closing price, P ratio forward, P ratio with respect to trailing 12 months. Okay, so EPS forward is basically this quarter plus next 3 quarters EPS. EPS trailing 12 months is this quarter plus last 3 quarters. Okay, and I have also historical data in here. So we'll see. So looking at the data, it looks like the forward P ratio between 55 to 60 in the last 2 3 weeks. And I also have in this table the historical data for the forward P and the trailing P for the last 9 quarters. Okay, so the way I made this table is I'm trying to capture the forward P and the trailing P on the day they release the earnings. Okay, I also have this table that says EPS actual versus projected. And also I'm trying to capture the earnings surprise for last 12 quarters. In this table, the black table, I'm trying to capture the minimum, median, and maximum value of the forward PE for last 9 quarters. And in this table, I'm trying to capture the mean, average, and maximum earnings surprise for last 12 quarters. So all of these values, we're going to use it in calculating the min, average, and maximum Tesla stock price for the future. Okay, so I did some calculations in here, minimum, average, and maximum stock value for Tesla. Let me show you how I did those calculations. Let me make it 2 digit after decimal. just to be consistent. Now starting from the minimum value, the formula I'm using is here. That is H4, that is EPS forward times N34, that is the minimum value of the forward P for 9 quarters. And then I have earning surprise, the minimum value. For the minimum earning surprise, I'm assuming there is no surprise and also there is no miss. Okay, otherwise I have to put negative values and that will give me the wrong calculation for minimum. So for minimum, I'm assuming the flat earning surprise. For the average, same formula, earning EPS forward, and then 034, that is average value. I should be putting average instead of median. So I'm trying to change it to average. Now we have average here. I'm using average and then I'm multiplying with the average earning surprise as well. Okay. For the maximum, same formula using EPS forward and then I'm multiplying with the maximum value of the forward P for last 9 quarters and then I'm going to multiply it with the earning surprise maximum value. That gives me minimum 156.69, average 246.34, and maximum 422.49. Tesla at this point trading around 175, 180. It's below my average value. So this tells that at this point Tesla stock price looks cheap. But thing is, you need to be cautious as well. Tesla keeps missing its delivery targets. And also the future EPS projections are not promising. So if Tesla keeps missing its delivery targets, then the future earning forecast and projection gonna be cut more. Okay, so that's the risk at this point. But if you're a long-term trader, if you buy at 170, 180, you're not gonna regret much. Okay, because either way, Tesla will come back sometime later this year or next year. So even if it goes down, it should recover. But if you're a short-term trader, you need to be cautious because there are some short-term headwinds on Tesla at this point. So there is a possibility Tesla might go down further if they continue to miss the delivery targets. So this was my analysis using financials and PE. If you disagree with my analysis, please write in the comment section so we can talk. I hope you liked this video. Thank you so much for watching. Talk to you more next time. Take care.